Hello, everyone. It is March 22, 2022, and you're watching me, Nikki, also known as Awesome 10X for the Philippine Market Update. Oh, it's March 23 pala, I mean. So let's discuss the Philippine market. Just a first brief, the Philippine market is down below 7,000. And you're seeing that a lot of issues are also on the way down. Your PSEI is mostly unchanged, but it's the fact that it's below 7K shows to us that the bears are still in control. Market value is very little, 3 billion. We know that it will still trade until 3 p.m. But as we can see, PSEI 7,000, almost all the shares are unchanged flat. Only in the mining sector is up, as well as industrials. Let's take a look at these index movers today. So when we're discussing industrials, we're actually talking about telecoms like PLDT. So let's just read through first the index movers today. Your URC is 112, your Ayala Corp is 790, your PLDT is 1767, Ayala Land is 35, Jollibee is 210, Converge is 2665, Emperador is 1458, Aboitiz Equity Ventures is 57.4, Globe is 2424, Aboitiz Power is 3515, Meralco is 372, Asen, which is your solars, 805, GT Cap is 510, Puregold is 3250, Megaworld is 307, Monde is 13.48. Lucia Time Group is $9, SMC is 108 pesos, DPI is 98.8, MPI is 371, Security Bank is 109, AGI is 1278, Wilcon 2615, BDO 130, JG Summit 5765, Robinson's Land 19.8, Metro Bank 53, ICT 222, SM Prime 38, SM 865. And what we're clearly seeing on the tape is a lot of nickels are moving up. So let's take a look at the stats. Top traded names are actually a few issues that are not in the index. You can clearly see that nickel is trading at 7.55, trading with a value of 42 million. A lot of miners are still rising. A lot of people still believe that gold, oil, nickel, commodities in general are still elevated and is unlikely to go down, which is making people actually load up on a lot of these metals in their portfolios. As a consequence, we can clearly see that the market is still very bearish on a number of issues. Let's take a look at the issues. It might not be aggressively shown here, but when you analyze most of the charts, especially of the food manufacturers, like URC, has still been downwards. You can see that for the last few months, even if just 6 months ago, URC has still been in a downtrend, and we haven't seen it actually negate. Although there is that rally right now from 100 pesos to as high as 112 pesos, we're still seeing a lot of resistance pressures here at 116, 118, even at 120 and then 127. So we're still seeing a lot of sellers here. Monde is also the same thing. You're seeing a lot of grievances on the likelihood of food manufacturers to pass it on to their consumers. With wheat, sugar, a lot of the prices of these commodity in the food group going up, corn, sugar, it is expected that these companies are essentially beholden to world price activity. And so we have no choice but to see the markets to continue to see food manufacturers still on a downward trend. So Monde Nissin, of course, let's go back to Monde Nissin's IPO price and let's take a look at how the market is interpreting today a lot of this movement, especially of Monde. So let's take a look as well on the most viewed disclosures. So all day press releases, ASEN, SPNEC, Double Dragon, Assets. Let's just take a look at press release. So just take a look first on all day. So all day is a grocery. Says here in the press release that they post net income of up 80% year on year. And let's take a look how big the net income of all day is. So the net income in the last few quarters is a whopping C. So all day says that they have earned, their sales are now 9.5 billion pesos. And they posted a net income of 394 million pesos, which is roughly about 5% net margin, or about less than 5% net margin of that approximately 10 billion of sales. So 4% net margin. Okay, that the chain is saying that they've improved their EBITDA margins to about 9%, driven by lower operating expense ratios and higher sales. So they say here that ALLDY is expanding the network, now standing 35 stores. That's amazing if you think about it. 35 stores with 9.5 billion pesos. So that means that approximately, if you are annualizing each store there and dividing it simply by 35 stores, well, 10 billion divided by 10 is a billion. So a billion divided by 3. So roughly, you're hitting about 300 million pesos of sales per store, which approximately means about 25 million per month on each all-day store. That's amazing if you think about the stores. They've got stores in Bataan, Pampanga, Libiscio, Taguig, Las Piñas, Molino. A bullish net income on all day, in a way, will probably spark people to reevaluate how bearish they are on Puregold. So we can clearly see here that all day, okay, let's take a look at all day marks. Take a look at this on a day order. So from a daily perspective, all right, so all day has been going down since the IPO from a peak of about $1, 1 peso and 10 centavos. It's now dropped about more than 50% to about 47 centavos. With about 400 million income, let's compare how all day is being treated from a PE basis to its current market cap. So how do we do that? Let's just go to stats here, analytics here, and make a watch list, all shares. So all day is ALLDY. Let's take a look at the volume here and the number of shares. So ALLDY here has a total value of about 280 million, total volume of about 580 million. I believe this is the volume of transactions for the month. I take a look at the shares here. The market cap of all day is about 10 billion, or basically 1 times price to sales, which means that at current valuation, the market is paying 25 times multiple for all day. Now, how about for Puregold, just for clear things, just to take a look at the market share leader of supermarkets in the Philippines. Puregold is trading at 90 billion, so that's 9 times bigger sales than all day. And yet, what we will see is that Puregold actually has more than a billion, more than 100 billion sales. So one thing to explain on comparison is take a look as well on how large the financials of Puregold's sales versus their current market cap is. So it says here that the gross revenue of one Puregold, entire Puregold, is trading at 170 billion revenues. So in terms of revenues, Puregold is 50% cheaper than all day. So even at 47 centavos all day and 32 pesos of a Puregold, the pricing of all day has to go down 50% or 23 centavos just to be at par on an PE basis or even just price to sales basis here. So there is that discrepancy, as well as the fact that you can clearly see that Puregold is trading at a net income of 8 billion pesos with a higher book value, with a higher asset value. So we're seeing here that from the pages of the financial report of all day itself, despite the fact that there is inflation problema in the whole Philippines and actually in the whole world, we would argue that all day's drop is still a measure of consumer sentiment, the fact that it is expensive, and then people might wait here at about 25 centavos to be at par to Puregold. So people are still waiting for a lower level. So still on the low end for all day. Now about Puregold, Puregold is trading at 10 times multiple, but it doesn't mean that it will really stop, no? For of course, 10 times can go 9 times, can go 8 times. But what can we see here on Puregold? So far, in the last 8 years, Puregold has quite been supported here at about 29 to 30 pesos. So I'm not sure if it will go down there, but let's assume that the market is bearish. The only thing that anyone who is buying pure gold at these levels can confidently say to himself is, number one, well, it's trading at 10 times multiple today. And of course, it can go cheaper, but you've got the valuation statistically on your side. And if you've got the value, then any dips would be considered a buying zone. So for pure gold, we will still consider it a buying zone, whether it's at 32 pesos or 31 or even at 29. We would argue that all these drops are opportunities, just as what happened here in 2013, 2015, 2016, 2020, 2021, and perhaps year 2022. If it manages to retest the 30 peso area, we would see a 50% upside even from just a historical standard. Simply because at 10 times multiple of pure gold, it usually will revert back to 45, which is their 15 times multiple, assuming that net income and earnings remain the same. So we know that the every 1,000 peso that somebody does in the grocery shopping will just purchase less as high prices on consumer goods are. So it just means that if you were spending 3,000, 4,000 pesos on your daily food intake, then you're probably just eating less cups of rice, less number of meat, and less number of vegetables. Let's also take a look at some questions here. Good afternoon. I just observed the dip among index stocks every month, which is end of May, coinciding with the MSCI. Is this officially happening every quarter? And the answer, in my view, is yes. We know that the MSCI rebalancing happens February, every 3 months, so February, and then May, so end of Feb, end of May, so 2, 5, 8, 11. So you'll see that some people have already created superstitious calls on sell in May because end of May, you've got a rebalancing. We also talked about the ghost month on August, but actually August is also a rebalancing month. Obviously, during rebalancing, some companies go up, some companies go down. And in my view, what you can do for all this rebalancing is that it is an event-driven trade. Event-driven trade, for instance, what happens if pure gold suddenly drops at 29 pesos? Should you buy it just in case there is a rebalancing effort of deleting Philippine issues for all you know? Or what if the Philippines suddenly get added into the index because of whatsoever reason, either a good collection or whatever? So I think that these MSCI rebalancing are simply opportunities to trade upon an event and has nothing to do really with the company fundamentals. And so the stocks falling down because of a deletion and the stocks going up because of an inclusion are simply chances to buy and sell. Okay, have you mentioned in the last Philippine market update that Philippine index has room to move down to 6.1 to 6.3. Do you still maintain this call or downside more likely rather than a breakout towards 7.2 to 7.4? Yes, I still believe that the Philippine index has room for the downside as we are actually in a very tight environment. What do I mean with tight? Tight means high oil prices, so the consumer spending is likely to be tight, and it's likely that even if the people want to recover and the economy of the Philippines wants to recover, I do believe that consumer spending will have a hit, especially dining out of restaurants, especially food manufacturers. And so you're actually seeing that happen in the Jollibee. So most of the restaurants, no matter what is happening, it seems to me. So actually, I've been giving a short reco on Jollibee. And the thing is, okay, medyo magulo yung ano no, yung mga charts na yan. I think kasi that the clear support of Jollibee is somewhere at about 180 to 200, whereas all the resistances here at about 250 to 320 continues to loom. And the reason why I'm bearish on Jollibee has nothing to do with management, but more on the difficulty of management to handle a high inflationary world. It is not their problem. It is actually the problem of all the restaurants worldwide. The problem of Jollibee, it's a problem of Pizza Hut, problem of KFC, it's a problem of McDonald's. Basically, every food business is gonna have a problem because of a potential demand destruction. You will have less food, you have less sales simply because less money for the average consumer. We're not talking about the elitists here, the top 10 percentile of the Philippine economy or the top 10 percentile of the world. We're simply talking about the massa or the mass market. So it seems to me that what we're seeing here is a classic trading range. You're seeing 260 and 240 already give up. And the fact that Jollibee hit down fast to 210, any rebounds here are considered sell areas. Now, we cannot short the Philippines. So the only thing that we could do is go into cash and wait it out. As we can see, there are very few opportunities to hide in the market because the Philippine market is largely based on properties like Ayala's, like the malls, department stores, and a lot of banks. So I'd argue that because the Philippines cannot be recession proof or inflation proof, with that setup, we'll still see this index trade sideways. So 7.4 is your top, and likely you'll get buyers here at about 6.2 to 6.4. So we're still gonna see that trading range. How will that play out? It will play out with SM. So SM Investments Corporation will be still the barometer. Been calling that these are all sell areas for your SM. And here it's already falling. Of course, the rally during the MSCI was simply a trigger to be an opportunity to sell, right? Because that was 940 and 930 are still very high prices for an economy that is not really improving in terms of the GDP. So I do believe that your SM can trickle down to 800 and even worse, I don't know if it's going to hit 700. But with a possible 10% downside for SM, you don't want to actually be invested in a Philippine index. I would assume that you've gone out and parking in cash. We did give an idea that the commodities in general are one of those few segments that are going to remain high. So we have seen Nicolasia continue to be supported by the market. And it's still very much supported here. You can see that uptrend still intact. So some people bought the 7 areas or 720, 730s. Even at 750 today, it's still a buying zone. It could potentially rise to 8 peso or about 850. I think that the uptrend on your nickel still remains in play. There's a lot of production problems right now on many electric vehicles. But most electric vehicles is captive of all these high commodity prices. So nickel is of course used in your production of your batteries for your electric vehicles, as well as nickel is being used for stainless steel, which is pretty much predominant on all railways, buildings, and even and sometimes even the likes of wind turbines. So there's really a demand for nickel, and so we foresee that the cash flows of Nicolasia will remain there, and one of those few companies that people will continue to patronize and buy on dips. We'll still see people buying nickel, and to a certain extent, because of the sector movement, that means that your FNI or Global Ferronickel has been displaying the same thing. So you should recall that we were saying in January that nickel FNI, DMC, Mark, all of these nickel miners are likely to be cash flow rich. That's why we talked about owning dividend paying companies with the thinking that these companies might pay a good dividend again this year. And so it goes, aside from the price appreciation, now it's just a waiting game on how much cash dividends these Nickel Asias, FNIs, and even the likes of DMC, which owns a lot of coal, will pay out for the year. So there are some few pockets of strength, I would say. What is your thought on SM? I think SM is going to fall. 865 is not a buy for me. I think it's going to go 809. Okay, there's a question. RHI and Primex, please. Robinson's Retail undervalued, just like Puregold. However, it is sad to say that it could fall to about 50 pesos or 49. And the problem here has nothing to do with Robinson's management, but really about the worldwide economy. So if your worldwide economy is forcing you to pay 83 pesos per liter of oil, it's not necessarily because you're going out. It's because most of the Philippines is import-related products. If your dollar peso is shooting up right now at about 52 pesos, as you can well see, the dollar is trading 52.36 from about 48 pesos a year ago. That is already a 10% depreciation of your peso against the dollar, as well as your oil prices here creeping up to $120, $110. A function of that is really bearish for the consumer spending of the world. So this is here, oil continues to be high, right? So we think that this is a very bad combination for retailers. So that's the reason why RHI continues to slump. As for Primex, I believe this is more of a property real estate. I'm not quite sure about the movement there from 2 to 280. But I am not as confident on the property sector in general. I haven't been reading on Primex as well, so I'm not sure if this was related to some dividend increase or some disposition or acquisition. Most likely, as a property, it's usually a function of those things aside from rentals. But even for rentals, I would say that the household spending or even the companies are having difficulty. So it's not looking good, if you'll ask me. Cash dividends last year was about 2 cents for what's this? Primex. So it's possibly not a dividend. Why is it rising? Press release, February 9. Let's just go through some earnings reports. Top of ceremony of Primex Tower. So I guess it was just an opening of a building. So I guess they opened the new building and then what is this? Unloads a property. So they sold. They sold 2 hectares of a 10-hectare property in Naik, Cavite, lead to Walter Mart for 200 million pesos. The whole property has a frontage of 330 meters beside Ayala Land Logistics. So we've been seeing actually from Primex that they have been in this position, meaning they're becoming a seller. So they're a seller of most properties. And by selling a portion of this property, the value of the remaining 8 hectares will appreciate significantly. So they believe that by selling to properties that they're because they have a land, so all of their land is gonna be higher value if there's like the partners like a Walter Mart, which is a store. Primex wholly owned subsidiary also signed a hotel management agreement with Accor to put up the first Pullman hotel in Manila. This is a 200-room hotel set for completion in 2023, housing top 11 floors of Primex Tower, largest mixed-use edifices in Metro Manila, one of the few buildings with lush green courses, walk golf. Okay, so we're seeing basically that they are building a building. So in some ways, Primex is trying to position itself following the footsteps of Mega World, wherein you build buildings and then you build near where people work. So I think like from a property standpoint, Green Hills is of course a very good area. So building a building in Green Hills is a good. I mean, it's a good idea to do so. Nonetheless, I don't know if that is the reason why this is going up. It's been going up since 2021, since September. So my view is that maybe for Primex, the reason why it's going up has to do with a potential cash from, well, they got 200 million pesos from the land hectare, but that's not much considering the expenditures that they will spend on buildings. But I could see a clear path up so far from a technical standpoint. But also the problem with the real estate is that most of them is actually still cyclical business so far. So I wouldn't see much of a sustainability here. If you've seen a resistance here at 3 pesos 50 cents, you might see another resistance when it comes to about 350. So at 280, your risk reward is actually just 20%. And it still has leeway to fall as well. So I wouldn't be too bullish on it if I'm looking to buy today. Okay, there are questions. What are your thoughts on the telecom play in reference to the recently signed foreign direct investment, 40 to 100% ownership? Well, I do believe that PLDT is a very cheap company compared to Globe and compared to Converge. That's why there continues to be a re-rating on PLDT. So the trend on PLDT has continued to go up. Whether this foreign ownership means that a lot of foreigners will buy PLDT, I wouldn't know how high they can pay up simply because, well, PLDT pays a dividend of about 80 pesos a year. So at 2,000, you'll just get 4%. So that might be a resistance at 2,000. However, at 80 pesos, you can clearly see that there's a reason why it's not going to 1,000 anymore, diba? So like at 1,000, that's 8%. So you look at it from a yield standpoint that some people are willing to collect about 5 to 6%. At 5 to 6%, that's your midpoint here of about 6% at 1.4. And then actually at current levels, you'll still be fetching about 5%. So that's why it's trading between 1.4 to 2.19. I'd say that PLDT will trade in a range between those yields of about 5 to 6%. So long as you have a 5% yield, there will be a buyer. Of course, if it goes 6% yield, even better. So it's positive, but I think largely positive to, well, Globe and PLDT are okay, but I won't see it as a runaway. So it's like a trading range for me. Thoughts on the upcoming IPO, the CTS Global? Um, I haven't read, to be honest. Yeah, I've seen that there is an IPO of City Securities. Let's go through the prospectus. Sige. IPO, CTS. So what exactly are the CTS IPO prospectus? So if it's just a brokerage firm and they are basically going to sell issues to fund the okay, let's just read through this. The main reason for this company IPO is to do global scale offering. Let's just read through it. Okay, CTS Global is planning a 1.38 billion peso initial public offering. That's about how much? 1 billion is $20 million. So something like $24 million. Tama, $24 million will be used to grow their trading operation. Okay, so for the past few years, we've consistently generated profits from assets under management, but we couldn't be able to maximize due to the overhead expenses. Engaging in the trading in the local bourse, as well as in stock markets of US, Hong Kong, and Japan, the current 30 individual traders manage a total capital of 550 million. For the past decade, the company maintained its capital stock at 200 million pesos and only raising it to about 500 in the last quarter of 2019 and an additional 50 million in 2020. Traders' techniques are falling under the FTSR trading framework, which is fundamentals, technical, sentiment, risk management. And they'll continue to employ the strategy to scale the traders' accounts. However, expenses will remain the same. It's said that this will lead to a promising opportunity for operating leverage. So I think you're actually funding more like a hedge fund in this manner. Because if 1 billion pesos is going to be funding that 550 million trading operations group, that means that a function of their profits will be shared to the people. And if, example, these people earn making 50% for the year, let's assume that they report their banking operation. You treat that more like a bank, but it's more like a brokerage firm with a trading segment. Let's assume that they are capitalized from 500 million to a billion, and they actually managed to earn, let's say, 30% or 300 million. That would be how the value of the company will trade. So let me see. Apart from using 1 billion to scale global trading operation, they're planning to expand their client accounts management segment and for general corporate purposes. They will be using 20 million to hire more talent, building its clients accounts management segment. Meanwhile, 100 million will be used for adjustment needed going forward, depending on the country's pandemic recovery. This may be in the form of developing company-owned office space, conducting its offer period. Okay, so I'll be honest. The thing about this IPO is that you're really buying it for the people behind it. So when you support the CTS IPO Global, in effect, you are actually assuming that you are getting a piece of an equity pie of a company that has very good traders. So of course, without a capable trading profit, there is nothing to share. Now, I wouldn't know exactly how consistent the performance of earnings are, but I would say that if the company can manage to make at least a decent size of about 25% consistently, then you're seeing a company valued quite high at about 25 times to about 40 times multiple for a trading scale like that. So I don't know how the market will interpret it, but that's how I will view it. there are times that it's easy money, to be honest, and there are times that it's also hard money. I'd argue that 2022 is trading globally is very profitable for the traders if they are very well suited for this environment. It's very volatile. You can make easy money on the 3 days, and you can also lose very fast money in 3 days if you're on the wrong side. So, but I'd say that CTS Global, it's more of a wait and see for me. But with the management of course everyone's basking upon City Securities founder and Chairman Edward Lee. I'd say that they are confident of that 1 billion peso IPO, and I'm slightly trading. I'm gonna say that it's positive, but I don't have much. How should I say this? I don't have much evidence to back it up, because at the end of the day, to provide evidence is to show the earnings and the trading profits, which will only happen next 6 months or next quarter. So if you are looking to buy it, I guess you want to wait for how their first year's operations and trading profits go. So that's how I'll interpret it. It would probably trade similar to SoftBank Group in Japan. If you know SoftBank Group 9984, Masayoshi Son. Masayoshi Son is being valued at the investments that it's done. So of course, when the Alibaba investment failed, when a lot of it didn't fail. He's still up, right? He bought it like 20 years ago. But the fact that Alibaba fell from $300 to $75 and bounced about 110 will influence the movement of the share prices of SoftBank. I'd say that CTS Global will eventually share to the fund fact sheets what exactly they own. So if they are trading short term, then it's very difficult for us to know what they own. So we cannot assess the risk that they are getting for that 1 billion pesos. No? So we cannot know the risk and the reward simply because we don't know what they own. Kasi if we know that they are, example let's assume they're shorting the markets, because right now in the US, it's quite going up and down, but mostly on the downtrend. So the question is, how much money have they done over the last year? Actually, there was it shared. To be honest, that would be something that you will check on CTS Global. I didn't check the prospectus kasi. But if they've done quite significant, consistent profits over the years past, I'd say that would be a buy, simply because if they can prove skill in a trading environment, then it would be okay in the next 2 to 3 years, because it seems like the US global markets is a trading environment, definitely. Okay, so Blumen has said, looks to me that Bloomberry is captive the reopening. Therefore, Bloomberry will be sold at about 7 above. Seems like a lot of sellers on Bloom. It has to do with the inflation as an aspect. If you've got high oil prices, it might derail people from spending. And casinos is a consumer discretionary good. That's why there's a negative headwind on Bloomberry, not just for Bloom, but in all consumer discretionary items like casinos. Asen is on the solar, but the problem with solars is that it is a high, the payout is quite long. And so it's called high growth, but for others, they will just trade ASEN. So ASEN is not something that will trade on a bullish side in an inflationary environment, in my view, despite the fact that the world needs to invest in solar. So I think like ASEN is going to be in a trading range. Support is still seen at 650. Current levels at about 8. So I don't think that there's a huge demand at 8 levels. Thoughts on C-REIT? Well, in general, I think people have been looking to park their money in a lot of REITs and investment funds that are providing fixed income like instruments. In the short term, I think they will just be valued similar to all the REITs and will be traded as such. If I'm going to be honest, I didn't really check much about the REITs. I'm more on the concern of the Philippine environment still having a weak recovery. And so at the back of my mind, I believe that most of these REITs cannot realistically sustain high dividend payouts But if they're paying like a huge dividend, I guess the market is just accepting that. So it's more of a flip to me. If you buy it during the listing price, just flip it after a few percentage gains. And I think that's what the general public has been doing with most of the REITs, especially with the success of Ayala REIT, Mega World REIT, Robinson's REIT, and even the Mega World REIT, no? M-REIT. So looks like all the REITs have been performing quite well on a defensive market. I think it's just seen as a defensive portfolio move. Okay, so thank you everyone, and hope that you learned something. And see you again maybe next week. So that's it. Bye bye. Thanks.